Welcome to the B.F. Anderson Technical Report for November 11th. Last week, the big news was the October jobs report. We can see that the economy added 531,000 jobs. Jobless rate fell to 4.6%, which is the lowest it's been in a long time. What's interesting here, though, is that on that particular day, interest rates dropped dramatically. You would have thought with a big jobs report, interest rates would have climbed higher, but for some reason, we're seeing record low interest rates, and they're certainly staying there. Now on the Nasdaq, you can see here now as of today, we're getting somewhat of a pullback to that 10-day moving average. This thing's been red hot. It's just somewhat of a cool down. You can see on the long-term graph, no problem. We continue to stay in a very strong uptrend. On the mid caps, we actually got the breakout on the mid caps, holding the break. Not a failed breakout so far, holding above that 10-day. On the New York Composite, same thing. We're seeing this market is broadening out. We're seeing a broad set of indexes starting to perform. Small caps, same thing. We got the breakout on the small caps, which we'll talk a little bit more about in the video. Now the S&P 500, not quite as bad as the Nasdaq because it's holding above that 10-day, but is pulling back somewhat after a really big move. You can see here on the weekly graph, we continue to stay in a very constructive uptrend. The aggression index actually back up to this old high here, pulling back a little bit today, but really looks constructive. Growth stocks are outperforming. We'll talk more about growth stocks as we get into the video. On the three economic indicators we look at, again, interest rates have rolled over with the big jobs report actually yesterday broke below the 200-day moving average. Interest rates continue to stay low, therefore no problem there. Price of oil kind of bouncing back a little bit, still moving sideways. Financial stocks, along with interest rates, are just continuing to stay flat. New lows are pretty much under control here. We've seen now a contraction back below 40 a day. That looks positive. On the inverted yield curve, again, no inversion, pulling back a little bit. Failed to make a higher high here, but this continues to look somewhat inflationary. We'll see. On the sentiment readings, the bull-bear ratio, we're still in that neutral area. We're not red hot. We're somewhat neutral. However, on the put-call ratio, this has really gotten fairly greedy, very, very greedy. We're down in this area here, which means that the large institutions are buying calls and selling puts. It just means that they're optimistic. Junk bond ratio, we're comparing the junk bonds to the safe treasury bond. We're seeing somewhat of a deterioration there. This is a little bit of a warning that people are somewhat concerned about the economy. Now on the QQQJ, which is a measurement of growth stocks, you can see very nice uptrend, continues to look positive. Volatility index pretty much under control, no problem. Volatility is back down to normal levels. Anything below these levels here would be good. Actually below 25 is the reading you want to stay below. Now, I wanted to take a look at growth stocks relative to value stocks. Now, what I've got here is the Vanguard Value Fund versus the Vanguard Growth Fund. Now, when the line is going down, it's telling you that the value stocks are underperforming the growth stocks. Now, this has been going on for quite a while, and as you can see here, really no reversal of that trend. So growth stocks continue to perform and outperform. We'll look at another graph here. Now on small caps, I did want to point out we got that breakout on the small caps, and also we're seeing a breakout of the relative performance line where I'm comparing the small caps to the large caps. Looks like small caps are starting to come on. Again, the market is broadening out. Again, another look at growth versus value. This is the Russell 1000 growth, which is more mid-cap, small cap, versus the Russell 1000 value. You can see here that when the line's going up, the growth stocks are outperforming. S&P 500 index, we've talked about that. Here we have the Russell, which again, we talked about that. Now here are the top five. Cloudflare continues to make the list, looks positive. Here is Asana, which is a software company, pulling back a little bit today. Continues to look okay. Would continue to watch. Here is Bill.com, which is another software. The softwares are really the place to be in technology right now. Here's Datadog, which is another software stock. Broke out on the earnings gap, continues to look positive. Here we have Lending Club, which is a financial situation somewhat rolling over, however, continues to make the top 5. If you have any questions, please give me a call. Thank you very much.